Welcome to my channel. In this video, I will be teaching you the basics of binary options and how I mastered price action in order to find a successful strategy that works for me in this market. Come on, let's start with the video. We will be reviewing the markets and I'm going to teach you how I trade my strategy. Okay, so first we're going to go through some basics in the trading. It doesn't matter the level of knowledge you have in the markets. What I do want to teach you guys is that you don't need indicators or some kind of magic robot that is going to tell you when to enter the trades. Okay, please note that you are trading in a financial market, and this is a very volatile market, especially and specific the currencies one. You're trading the Forex market. This is a market that moves around $6 trillion daily. Okay, so it's a very big market. We need to be very careful with our money. So let's gonna start with some basic stuff. Okay, the first thing I want you guys to learn is market structure. Okay, market structure. What does this mean, Eduardo? What does market structure mean? Market structure is based on trends, okay? And trends are the direction market is moving. So you have, for example, you have an uptrend, you have a downtrend, and then you have a side trend. So this is the three trends we need to learn. Okay, market structure is based on trends. You have three trends: uptrends, downtrends, and side trends. This is the most important thing because you always want to trade along with the market. Okay, so we're going to put this here in capital letters. So note, always trade with the trend. The trend is your friend. Okay, so the first thing I want to know is what is the market structure. Once I have noticed what is this market structure, I'm going to look for which trend I'm in, and based on the trend I'm in, I'm going to trade in that direction. Okay, this is very important, guys. You'd never want to trade in the other direction than the market is going. You're going to go with the trend. That's why I always say the trend is your friend. Okay, so once you have your market structure decided, once you know if you're going into an uptrend, downtrend, or if you're inside a side trend, you want to look for something called support and resistance. Okay, so basically these are levels where price trends to react. Okay, mostly these are rejection prices. And in binary option, guys, you want to trade the rejection, because remember that the main difference between binary options and trading CFD, what is contract for difference, is that in binary options you have an expiration time. Not only you need to win the direction of the move, but you also need to do it in a specific period of time. So you need to be very precise with your trades. This means you need to look for a rejection area that has been previously tested by the markets. Okay, so once we have the market structure, we know which is the main trend of the markets. Second, we find an area where we see that previously the market has been rejected. Now we want to go and use a specific tool that I'm going to teach you that is the Fibonacci retracement and Fibonacci extension. Okay, so you want to use the Fib levels to identify potential PRC. What is a PRC? Price reversal zone. Okay, so you want to use Fib levels to identify your potential PRC. This is very, very, very important. So I have one market structure. I always trade with the trend. I have support and resistance. I look for levels where the price can react. I want to price reject this area. And I'm going to use Fibonacci to find these levels. Finally, last but not least, and the less important, are my indicators. Okay, the only indicators, these are an extra confirmation. Okay, indicators are extra confirmation. Okay, in this scenario I use the exponential moving average with periods of 50, which is green, 100 periods, which is yellow, and then 200 periods, which is red. Okay, those are my EMAs. So I have one, market structure, two, support and resistance, three, Fibonacci levels as a PRC, and last but not least, my indicators, which are the exponential moving average with periods of 50, 100, and 200. These are these lines you're going to see following up with the price. Okay, so please take a picture of that. We're going to be seeing each and every one of these steps right now. Remember, this is also going to be recorded for our channel. So if you're watching the recording, you can just pause the video, write it down so you know this is part of our strategy. Okay? So we're going to start then with the market structure. Just going to put it down here. So, market structure. We have three kinds of trends. We have uptrend, we have a downtrend, and we have what it's called consolidation or side trend. So how do I know that the market is in a uptrend? Let me show you guys. When you have a move to the upside, then you have a move that is higher than the previously move, and then you have a new high that's higher than the higher high before, then you have a new move that is a higher low than the previous low, and then you have a higher high, you can say you're in an uptrend. Why is this, Eduardo? Because there's always a higher low. Do you see how this is like a stairs? You have higher highs, higher highs, higher highs, and then you have higher lows, higher lows. This higher is higher than this low. This low is higher than this low, and this high is higher than this high. Okay, so you have higher highs, higher highs, higher lows, higher lows. This is a uptrend. You can see the market making a structure to the uptrend. Okay? What is, for example, the other way for a downtrend? You want to see market pushing down, then having a higher low, then you want to have a market making a lower low in comparison to this low. See how market is making lower lows, lower highs, lower lows, lower highs, but this lower is lower than this previous high. You see? And then you want to see a lower low. So you can see now that every time your market is making higher, it's making lower highs. It makes lower low, lower high, because this high is lower than the previous one. Then you make a new lower low. This means this low is lower than the previous low. And then you're making a lower high because this new high is lower than the previous one. Okay? So at this time, you can see that the market is trending downwards. You can see that the market has a clear structure of going to the downside. What happens at a side trend? Market is called in a consolidation area, or maybe you can even say that the market is choppy. So for example, you have a push to the upside, then a push to the downside, then a push to the upside, then a push to the downside, or even it starts making push it between, ranging inside. It doesn't even have a market clear structure. This here is called market side trend. Why? Because you can see that the market is basically inside of this side trend. Market cannot break this area. So if you see market ranging inside of this area, this means you're in a side trend. What does this mean? You do not trade side trends. Never, 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 never. Okay, so you never trade them. I'm going to put it in red so you understand. You never trade a side trade, a side trend. Okay? You want to look uptrends to buy, downtrends to sell. So it's uptrends for buy and downtrends to sell. Got it? So uptrends I buy, downtrends I look for a sell. And a side trend, I never trade that one. So I see a side trend, I do not trend that. Is everything clear? Do we have any questions until now? So please leave me your questions in the comments and I will be happy to solve them. Okay? Once we review this on the charts, we're going to look for past opportunities. We're going to try to identify these trends. Okay, so let's check our main structure again. So market structure is based on trends. Trends is the direction the market is moving. You have an uptrend, a downtrend, and a side trend. Always trade with the trend. So once I found out what is my market structure, I'm gonna look to trade with that trend. Okay, then we're gonna look for support and resistance. Sorry. How can I explain an easy concept what support and resistance actually is? Let me go down here. And now we're gonna see support and resistance. They also call it supply and demand. or they also call it a floor and bottom, or bottom and top. Floor and top. Let's call it floor and top. Okay. So, let's get this eliminated. So this out, this out. Okay. So guys, imagine you're in a house. This is you. You're in your house, happy because you're learning today how to trade. This is your house. You have a roof. Okay. And you are on your first floor. So this here is your support. Okay. Your floor is your support. And you have a resistance here. You see, your roof is your resistance. So you have floor and you have a ceiling. You're supporting your resistance. And after your trading session, you want to go to sleep. And your bed is in the second floor. So imagine this here, or you have a basement. You have a basement where you have your room, you sleep there, you trade there, you do everything there. So you go from your main room into your room. What does this mean? Now you're on your desk trading. This means that what was your support previously became now your resistance. You see? Because now you have a new ceiling, you have a new roof. Your roof is always your resistance, and your floor is always your support. And what was previously your support is now your resistance. And you have a new support here. Okay? So this is very important to understand, guys. You can get at the beginning kind of confused with the names and that, but it's all right. There's no problem. The important thing is that you know that you have support and resistance, and that your support can become your resistance, and vice versa. Your resistance can become a support. Okay? So once we have that figured out, what does that have to do with the price? Prices always look for previous support and resistance in the markets. So for example, if we have a resistance here, what price is most likely to do is go find the resistance, touch the resistance, and then reject the resistance. So you want your price to reject your previous resistance. And then what? Go and find again a support. This is what you're aiming for. Boom. And then go back again. So what happens, for example, if your price just breaks your resistance? You break your previous ceiling or your previous resistance. Now you want your previous resistance to become a support by price rejecting this area and going in an uptrend to find a new resistance. Okay, so you want to see price even reject your previous resistance, or you want price to break the resistance and then use it as a support. Same here. You can break your support and then look for a resistance, touch, and sell. Okay? So you want either rejection price, breakout, retest, and then shift off. This is what we are aiming at with support and resistance. Okay? There are many levels, guys. There are many levels in the markets with potential support and resistance. So for that, we're going to use a specific tool which is called Fibonacci. Okay, so once we have this both clear and we practice them and we become really good at them, then we add Fibonacci. So see how this is correlated. We have an uptrend, a downtrend, we buy the uptrend, we sell the downtrend, we do not trade with the side trend, and then we're going to look for potential support and resistance areas. Okay, so let's go now and find another pair since I've been drawing around here. Let's see, for example, USD JPY. So for example, here I can see that price has been in a strong uptrend. Eduardo, how do I know that price is being in an uptrend? Because you can clearly see you had a movement to the uptrend, then you had a what? A higher low. Then you had a higher high, then you had a higher low, right? This low is higher than the previous one, and this high is higher than the previous one. So higher high, higher low, higher high, higher low. Now I'm willing to see price going higher, right? What did happen? Did price went higher? No, it got stuck there. And then it went lower and it got lower than the previous high and then market closed. This means that in this area, we have what? We have a resistance, right? Check out, price goes and ceiling, 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 ceiling. Resistance, resistance, resistance. It cannot break the resistance. So that means that every time the price comes here, I have a potential rejection area. But Eduardo, wait, you said that we should buy with the trend. And what's the trend? Uptrend or downtrend? Let me know. What is the trend here, guys? What are we seeing here? Price is moving strong to the upside, right? This means, should I look to sell here because it rejected once? No, hell no, because I will be trading against the trend. The only way I will be trading this is if price breaks the trend and then looks to reject this area, and then what my previous resistance was now becomes a support, right? I only trade with the trend. Very, 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 very important. So let's see for other examples. So for example here, guys, check this out. We have push to the downside, higher low because this higher is lower than the previous one. Then we have a lower low. Then we have a higher low because it's lower than this one.
then we have a lower low, and then we see price moving up and then moving down, and then price broke the trend. Eduardo, how do I know it broke the trend? Because look, you had a trend going down, right? You had a trend going down. You had lower lows, lower highs, lower lows, lower highs, lower lows, and then the price started gaining strength to the upside. It broke this previous high, it broke this previous high, and it broke this previous high, reaching the almost the highest before. Okay, so what can I see at the beginning of this downtrend? I'm gonna stick here. I'm gonna erase this, and I'm gonna stick here. Every time price went down and it retraced, since I'm in a downtrend, every retracement is an opportunity for me to sell. Listen carefully. Every time the price retraces, it is in a good opportunity for me to sell. If I were in an uptrend and price started retracing, it would be a good time to buy. So in this case, we're looking to sell. Eduardo, what did your theory tell us? What was the theory on the sell? I needed to find what? A support and resistance area, right? I needed to find a support and resistance area. So, for example, here, where's our example? So, for example, here, price went down, retracement, and check out. Here, it made its first retracement. What can I identify? Check here how we had a roof, roof, roof. So it means that this here, actually we could make it smaller. This year was a zone that the price at the beginning couldn't break. You see how the price came here, couldn't break it, came here, couldn't break it, came here, couldn't break it, came here, broke it with strength. So now price is retesting this area, and guess what? It got rejected. So now you see price rejecting this area. The previous support and resistance is now being tested again in order for you to sell it. And guess what? Price makes the lower low, comes back again, and look here how it retests again. So this same area that we have been using in the previous to sell was a area of rejection. You see how clear this is? So the information you receive from the market in the past can help you to find good trades in the future. You want to use the action of the price in the past for the future. And here is when I start using my tool called Fibonacci, because I want to see if this potential reversal zone, this PRC, is actually kind of heavy. I want to see if this PRC has a Fib level that I can use as rejection. And that's what I'm going to test right now. So I go to my Fibonacci retracement. I can find it in trading view right here. I see Fib retracement. I like to put my magnet on, and then I go from the end of the, well, here's the first impulse. I want to go from the end of the wick to the beginning of the wick. Or I can even take this one also. Okay? So, Eduardo, why do you take this from the end to the beginning because my Fibonacci is built that way. If you have the custom Fib levels at TradingView gives you, that will be from the beginning to the trend to the end of the trend. The most important thing, guys, is that you see that you want to have the 100% at the beginning of the impulse and the 0 at the end of the impulse. Okay? So what do I see now? I see my 38% of Fibonacci being tested. So I go here, I put some horizontal line right there, and guess what? See how perfect I know that my price 932 has been rejected. There. Now, what do I want to do? If price hits for me 930 or even 935, I'm going to take a sell. What am I looking for? Rejection of the 930 area. I would take that on a 5-minute sell and see how price touches here, rejections, 5 minutes later, it's a win. Okay? So again, I'm going to look for another opportunity now. Price moves down again and it starts retracing. Look here. And from the impulse to the beginning of the impulse, what can I see here? I see that right here at my 61% of Fibonacci, I had a support. You can see it, guys, right there. You see? Support. And if I go to the past, oh, look, support. Is this coincidence? Like, is this magic? No, it's math. It's market analysis. Indicators won't tell you that, you know? Your magic robot is not going to tell you that. That's why robots don't work for binary options. If you want to make real money, you need to learn to read the price of the market. So I make my Fibonacci from the finish of the impulse to the beginning. I see I have a 61% area of retracement. I see I have a support and resistance area. I see I'm in a downside market structure. Why do I do if market hits the 800 area? Look, even. Plus, I have an institutional price, 800 area. I take 5-minute sell. What does the market do? Pushes, push it, goes, it activates my sell. I take my 5-minute sell, and then boom, I won it. So with one analysis, I got 2 potential entries. And both of them were actually winning. You see? Are you understanding what I'm trying to teach you here? Please, I read your comments, guys. Okay, questions. Yes, I'm waiting for your questions, guys. Please, if you have any questions. Let me know if you have any question, guys. So when you decide to sell in a lower trend, do you wait for it to hit the resistance or to pass it a little? It depends. So I want to see, for example, how the price is rejected. In this scenario, for example, I can see that price has respected this area very well. Look how it can pass. So here I would take the 930. If I see the market is too choppy, so the market maybe has a lot of wicks, I would look for a wick to touch the EMA or to have an institutional price. So if I have a currency pair that has a lot of wicks and it's very choppy, it's so UJ it won't happen. But for example, if you trade Aussie NCD, or you have some maybe the Aussie dollars, or you have the NCD dollars, and they leave you a lot of wicks, you wanna see for a wick touching the EMA. That's gonna help you at a rejection price, and you can have better entries. Yes, you can apply this to every time frame. This is my main strategy to trade CFD on Forex. I use this strategy to trade stocks. I trade binary options on 5-minute time frames. I trade indices with this. It's the same strategy. It's called price action. Okay, guys? So let's see, for example, here. Let me get this done. So for example, here, price moves to this area, right? You already know that you had a price rejection here, you're seeing price being rejected there. You won this trade. You already saw this is a high resistance, resistance, resistance. So now you want to go and you want to trace a Fibonacci level from your whole movement, from this movement to this movement. And check this out. Price literally kisses your 61 area of Fibonacci and retraces. There's a way you can add more precision to your Fib levels, and this is called the Fibonacci extension. Which percent of Fibonacci do we have to use? You can use all of them. They're all of the same equal relevance. So see, for example, here, it retraces the 23rd% twice, here the 38, here it breaks through the 50 straight to the 61. You want to combine your Fibonacci retracement with a support and resistance. The most strong Fibonacci levels are 61% area. This is called the golden PRC, golden price reversal zone, and the 38%. Those two are the most strong ones, but you can use all of them. They're all of them, they are relevant. Okay, so now check this out. Fibonacci extension. You go from the end of the impulse to the beginning of the retracement and the end of the retracement. And now see how you have a zone here. This is my zone. Check out here how you have here a zone because you have confluence. You have two Fib levels at the same time. See how this confluence is a perfect support here. So if price would have been up to this area, this would be a strong area of rejection. Kind of. If it touches the percent of Fib, we have to take, I take 5-minute trades always 5 minutes. So yes, actually it depends on the time frame. If you're looking at 15-minute chart, you're not going to trade 5 minutes. You want to trade 15 to 30 minutes. If you look at a 1-minute chart, you want to trade maximum 5 minutes. If you want to see at a 1 hour chart, you want to trade 4 hours or 2 hours. So if you see 1 hour chart, you're not going to trade 5 minutes, right? So that's why I recommend you guys to trade on 5 minutes time frame and take 5 minute trades. So this is an area, got rejected, very nice sell. Let's get done of this here. Let's get done of this. Let's get done of this and this. We're going to see for some other examples. So for example here, look, price made the move, went down again, and I know that right here I had a previous rejection zone. So I'm going to take my fib level. Gonna measure this. Oh wait, I had the wrong one. Gonna measure this pullback and watch how I have 50% right here. And I have 61% right here. I'm gonna eliminate this one, okay? So, Eduardo, which one should I take? Should I take the 50% or should I take the 61%? You wanna see in the past which one has had a better rejection. So for example, 50%, you see price rejected here, price rejected here. In the past, maybe here. Now I go to my 61%. I see price rejecting here, here, beautiful wick, here, beautiful wick, here, here the wicks. So what does this mean? For me personally, I would take first the 61. Why the 61 and not the 50? Because I have a stronger area of resistance, and the most important thing for me, 61, well, not the most important, but a very important level, 61. And in addition, plus, see how I have here the 200 EMA working as a flexible resistance. So this one, 830, would have been my entry price. Got touched, and then it literally dropped. It melted. This here, only with this analysis, we would have 1 winning trade, 2 winning trade, 3 winning trades, 4 winning trades. One simple analysis, and we got a nice 4-0. Could we say that 50 and 61 are good ones for this case then? Yeah, so 23 was a nice area, the 38 was a nice, the 50, the 61, the 78, the 88. Where should I sell? I look at the 23. Do I have something here? No, I don't see nothing. I don't take the trade. You see? Hey, Eduardo, do you see something here? The only thing I see is 1, maybe 2. If you've got the sell here at the 50 EMA, you would have here 1, but it's not enough for me. You have the 50, I have 3 confirmation heres. I have the 61, I have 4 confirmation heres. I like this the most. I could have gone here, nothing here. Here, I like this one also, the 81, 88%. If it breaks 100%, trend has been broken. Okay? Exactly. I look for strong rejection areas. Yes, the fib extension is literally how it comes. I don't change anything. Questions, guys? Do we have any other questions? Okay, let's get on to the questions, guys. Okay, guys, so for the fib retracement, check this out. This is my Fibonacci configuration right here. So these are the levels I use for binary options. I extend my lines to the right always so I can see if in the future they're making something. I have my fib reversed. See if I change this, how it reverses. So since I have it reversed, I make it from the end to the start of the trend. Okay. Trading view gives you the standard one that is without reverse. Okay. It's just the normal one. So for example, if you have this, if you have the normal one, so if you have fib normal or trading view, you want to go from beginning of trend. This needs to be your 100%. And if you use, well, and the end of trend is your 0%. And if you have fib reversal, you want to have the exact opposite. So for example, guys, see, I have the reversal fib. Sorry, this is it's here 100 and here 0. So reversal Fibonacci. Where's my beginning of the trend? Here. Where does it end? Here. I want to go from 0 at the end of the trend to 100% at the beginning of the trend. You see? If my Fibonacci would have been the normal one, the one trading view gives me, I need to draw it in order to see my 100% at the beginning and the 0% at the end, because it's a retracement. The longer the retracement is, the higher the percentage. Okay? So have this in mind. Depending on your Fibonacci setup, you're gonna have a different way how to draw it. Can you go a little bit up to see the parameters? Oh, I can put it again. Or you can just pause this recording. There you have it. So you can there take a screenshot and then we're good to go. Okay, so the extension is as it comes, guys. Extension as it comes. No problems there. Okay. Any other questions? Any final questions, guys? This is all. You only need to practice. You need to practice, 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 practice. I on the WhatsApp group share you all of my trades. Go see the trades I take. Check out the trades I take. Check out the trades I took yesterday. I took one trade, a winning trade. Check out how I analyze, and you're gonna see the exact 4 confirmations I just teach you today. Okay. Remember, I trade live 3 times a week for my group. So if you want the information, just you can talk to me, or you can talk to the admin of the group. She's my assistant. She's gonna help you with all the details. Okay. This video was made for you guys to learn a simple strategy in order to make money based on price action. No robots, no special indicators, no bullshit. Literally 100% pure price action. Okay, guys? If you have more questions, let me know in the group, and I will be happy to be resolving them for you.